Hey everyone, Walmart reported quarterly financial results that sent the stock price higher following an upgrade of its annual forecast. Now, I'll review those results here in this video, talking about the revenue growth, profitability, and a key area of growth for Walmart that is growing much faster than the rest of the business overall. Additionally, I'll update my recommendation for Walmart stock. I've had the stock rated as a buy for some time, and you're going to want to tune in to see if I'm downgrading the stock, if I'm saying it's a good time to take profits, or if I'm suggesting the stock is still a good hold here for long-term investors. So let's start with the financial results.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so one of the big highlights from the quarter was that the e-commerce segment is doing really well for Walmart, as management said that global e-commerce penetration is higher across all markets, led by store-fulfilled pickup. And I'll talk more about that a little bit later in the video. The consolidated revenue for Walmart in the latest quarter was up by 6% to $161.5 billion. That's strong revenue growth for Walmart. That's higher than I would expect Walmart to grow over the next several years over the long term. But over the short term, it may grow at this rate for some time, given some of its segments that are absolutely thriving. The company also increased their gross profit margin by 42 basis points, driven by improvements across segments, and that wasn't an easy accomplishment given inflationary pressures across the board and the rising cost of labor. For Walmart to have kept those costs under control was a solid execution on the quarter, to be sure. Operating income jumped by 600 million or 9.6% year over year. That was due to growing revenue and keeping costs under control, which led to higher operating profitability overall. Now, let's go back to global e-commerce sales, which grew 21%, which were led by store-fulfilled pickup and delivery and marketplace. So this particular strategic investment has worked very well for Walmart and Target. For Target, much better than Walmart. Customers have proven or have signaled that they love this feature where they can buy online, make the purchase online, and then go to a Walmart store and pick it up. And you can have your order fulfilled in that way in about an hour, sometimes 2 hours. So you could purchase online and then you could go to a Walmart store, park in the parking lot, and someone will come and bring you your item. Or you could just walk into the store and pick up your item. That's much faster than what Amazon can do. Amazon can get you your items pretty fast, 2 days, and sometimes the next day. Certain items you can get the same day, but not very many. This beats Amazon at its own game, speed. And Walmart and Target, they've found a way to take all of these brick and mortar locations, they have thousands of them, and turn them into an advantage. 6-7 years ago, they were a huge disadvantage because consumers preferred shopping online, and these stores were just a big expense item for companies like Walmart and Target, where consumers were increasingly shopping online. But by creating this omni-channel experience where you could buy online and then pick it up in store, they've now flipped the script and turned these physical locations into an advantage. And that's driving growth, and that's driving increasing customer usage because it's so much more convenient than having to go inside of a store, look around for the items you might need. Maybe they have the one you're looking for, maybe they don't, and you're spending a lot of time versus you go online, you search up exactly the items that you want, you add it to your cart, you make the purchase, you go into the parking lot and they'll bring it to your car. So much more convenient for customers, and they are demonstrating how much they like it by how much more they're spending on this category. Later this month, we're going to get results from Target, and I'm not going to be surprised if Target also demonstrates strong growth in this category: buy online and pick up in store. 21% growth for Walmart in a segment for a business that doesn't hardly ever grow by double digits. So this is a huge growth driver for Walmart and a big strategic win for Walmart. Also, the global advertising business is doing very well, grew 24%, including 26% for Walmart Connect. That's another huge growth driver for these retailers, including Walmart. Amazon has had huge success in advertising. eBay, Etsy, Home Depot, Target, they are all now focusing on driving advertising revenue because they all get all of this customer traffic. And sometimes customers come online and they make a purchase, and sometimes they don't. But if you've got ad revenue, every time they visit your website, you're likely to generate some ad revenue based off customer visitation. And then if they do make a purchase, you can generate extra ad revenue from businesses that are willing to pay per click or pay per purchase. It's been a nice extra monetization stream for these retailers. Not so great for businesses because now that just kind of upped the ante for competition. It's kind of like you're now having to offer your products at a lower price, because if you don't spend the money on your advertising and somebody else does spend the money on advertising, your products won't be shown as prominently and you might lose sales. So it's another way that these retailers have been squeezing their suppliers, their merchant partners, and taking more of the profit share away from their suppliers. Suppliers, merchants, they don't really have anywhere to go because this is an industry-wide phenomena. So no matter where they turn, they're going to face that situation. Finally, global inventory was down 2.7%, including a decrease of 4.2% for Walmart US. So inventories were a bit elevated in 2022. They've worked themselves down and they're on a healthy level now. The rapid shift in consumer spending behavior that happened during the economic reopening caused a bit of a mismatch between inventory and consumer demand, but those have leveled off. Walmart and the industry managed those well without big discounts or big losses. So that was good news to hear for Walmart stock investors. Going forward, Walmart upgraded their revenue and operating income guidance for the year, suggesting now they expect the higher end of what they were thinking about. And so not only was the current quarter good, but Walmart management expects the rest of the year to be solid. And this is driven by a consumer that's looking for bargains. Consumers are now looking around, and the price of everything is significantly higher than when it was in 2019. Eating out, significantly more expensive. Travel, significantly more expensive. So while people wanted to get out of the house and spend more money away from home, now that they're facing that sticker shock and they're seeing their savings dwindle, they're seeing their credit card balances rise, they're now saying, all right, we've got to find ways to save more money. And Walmart is the go-to destination for folks trying to save money. And management said the biggest cause of their increase this quarter was that they were getting more high income shoppers. Higher income shoppers are now going to Walmart because even higher income shoppers are facing budget constraints because of inflation. So Walmart is the beneficiary of that trend. Now, Walmart stock after the rise is trading at a forward price to earnings of 24.45. Just about the most expensive this stock has been. You can see going all the way back to early 2021. This is the most expensive Walmart stock has been. And while I agree it has good prospects as consumers look to save more money and look to increase their bang for their dollar, I had Walmart stock rated as a buy coming into the quarter, but given the strong increase in valuation over the last several months and following the latest quarterly results, I am now downgrading Walmart stock to a hold, market perform. And so if you have held Walmart stock, I think this is a good time to take profits and place your investment somewhere else for the time being. Or it's not too bad to hold it either. It's not like I feel Walmart stock is so ridiculously overvalued that it's going to go down. I just think there are better opportunities now that Walmart stock is so incredibly expensive. So there's my take on it. I think the valuation is now getting stretched for Walmart, although they did deliver an excellent quarter to be sure. And I'm updating this recommendation on May 17th. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.